I am very pleased to welcome all of you to the latest event in the series, Meeting of the Minds, Business and the Human. This series strives to examine fundamental issues regarding business and commerce and how these issues can be seen not only from the perspective of business and economics, but also through the lens of culture and humanistic inquiry. This series is a joint project of the Booth School of Business and the Stavanovich Institute on the Formation of Knowledge. And I want to express my appreciation to Madhav Rajan, Dean of the Booth School, and Shadi Barch, Director of the Stavanovich Institute and Professor in the Classics Department, for working together to establish this series. To me, this series is not only interesting and intellectually provocative, but it captures something essential about the University of Chicago, namely the need to examine complex issues through multiple lenses, understanding different perspectives, and examining assumptions are all part of the nature of rigorous and challenging inquiry that characterizes the university's work in education and research across the full scope of our work. Today's discussion is titled Economics East and West. Dean Rajan will formally introduce the panelists and the moderator in a moment. But since in this case they are all good friends of mine, I want to express my personal thanks to Professor Austin Goolsbee, Professor Yang-Da Lee, and to our well-known alum of the college, Joshua Cooper Ramo, for participating today. It is good to see each of you, and welcome back, Joshua. Now I will pass the proceedings to Madhav, who will introduce the panel and moderator.
Thank you, President Zimmer. Hello, everyone. Depending on where you are, good evening or good morning. As Bob said, my name is Madhav Rajan. I'm Dean of Chicago Booth and the George Shultz Professor of Accounting. On behalf of the Booth School and the University of Chicago Stavanovich Institute on the Formation of Knowledge, it is my distinct pleasure to welcome all of you to Meeting of the Minds, Business and the Human. I'm thrilled to introduce today's very distinguished panel. Austin Goolsbee is the Robert Gwynn Professor of Economics at Chicago Booth. He served in Washington as the Chairman of the Council of Economic Advisors and a member of the President's Cabinet. His research has earned him recognition as a Fulbright Scholar and a Sloan Fellow. He was previously named one of the 100 Global Leaders of Tomorrow by the World Economic Forum and one of the 6 Gurus of the Future by the Financial Times. Austin's ability to explain economics clearly has made him incredibly popular in the media. Jon Stewart described him as Elliot Ness meets Milton Friedman, and Austin has twice been named a star professor by Business Week's Guide to the Best Business Schools. Thank you very much, Austin, for being with us.
Thank you.
Daliang is a senior advisor to the president and the provost at the University on Global Initiatives. In this role, Dali helps to develop and implement the university's global strategy and initiatives in education, research, and collaboration to create and sustain international opportunities for our faculty and students, with special focus on China and the rest of East Asia. Dali is the William Claude Reeves Professor in the Department of Political Sciences and the college. And between 2010 and June 2016, he was the founding faculty director of the University of Chicago Center in Beijing, a university-wide initiative to promote collaboration and exchange. He's also a non-resident senior fellow at the Chicago Council on Global Affairs. Thank you, Dali, for being here.
Thank you.
You're welcome. Our moderator is UChicago alum, as Bob mentioned, Joshua Cooper Ramo, Chairman and CEO of Sorne, a privately held advisory and principal investment firm. Joshua has served as lead China advisor on more than $200 billion worth of completed transactions and led investments alongside China's most significant commercial and financial players. Prior to this, Joshua was CEO and vice chairman of Kissinger Associates for 15 years, and before that, foreign editor and senior editor of Time magazine. He's the author of 2 New York Times best-selling books that have been translated into more than 20 languages each, The Age of the Unthinkable and The Seventh Sense. Thank you, Joshua, for moderating today's discussion titled Economics East and West, and please take it away.
Thanks so much. It's a pleasure to be here and great to be with you all.
I thought since we, are having part of the hosting of this done by the Stefanovich Institute for the Formation of Knowledge, and because of the fine University of Chicago tradition of kind of digging deep into the roots of things before you begin thinking about where you're going to go in the future, that we might begin by trying to provide a little context about the idea of economics in these two different hemispheres. And so, Dolly, I thought maybe I would start with you. As you look back in history, if you were kind of to ground or to sort of chart the progress of the notion of economics as a political act, as a political responsibility, what important elements of that would you highlight as we, begin to think about where we?
Well, in many ways, the first thought it occurs to me when I think of the question you have asked is how modern the economic institutions are. For example, the central bank system did not exist until the early 20th century. So before then, currencies in China and in many other parts of the world were based, for example, on precious metals and so on. But at the same time, in the Chinese case, in terms of the tradition of governance, the emphasis was on scholars learning Confucian ideals, in particular, passing exams, becoming pegged to lead the country, and of course, the economy happens to be a part of it. But at the same time, however, there has been this emphasis in the Chinese tradition to really value scholarly wisdom and so on, but at the same time downgrading to some extent the importance of commercial transactions, even while China, in fact, was one of the first societies to have adopted paper currency and so on. So it was a mixed record, and partly because, in fact, again, it was pre-modern in many ways. So there were a set of established practices, but at the same time, there were limited and actually systematic thinking about the economy, about how the economy interact with institutions, and how, in fact, globally it was interconnected. In fact, until relatively recently, the Chinese economy, of course, was connected globally, but at the same time was also limited, especially in the Qing dynasty. There was a lot of emphasis on restricting global interactions.
Yeah, so I think that's an important and significant point as we, look at Asia. We understand the tremendous amount of economic growth that's going to come out of that region over the next 20 or 25 years, but understanding also that so many of those economics ideas that have roots in things that are essential to the Enlightenment process, the Industrial Revolution process, the Scientific Revolution, all of those things were imports, in a sense, into Asia. Also, maybe on that note, it's a good place to kind of switch to the Western perspective, where the development of an economic philosophy, a way of thinking about the world, to some degree did run hand in hand with the process of the Enlightenment and the Renaissance and the Industrial Revolution. How do you look at the history of economics, and what are the sort of significant milestones as we prepare ourselves to look for the future?
Yeah, these are all deep questions, and it's fully what I expected. When you said we're going to start at the beginning, I was like, oh no, it's a Peloponnesian War. I got to go renew. What did we learn at the University of Chicago? I guess I would split it: the history of the economics and the history of the economy. Now, on the economy, the way the U.S. got to be the richest country of all the major economies of the world, it kind of followed a process, first endowed by tons of natural resources. So for the early and mid development of the U.S. economy was heavily resource based, not unlike kind of a South Africa model, Australia model, or something like that, Chile, Argentina. Having the largest open market in the world in the trade that could take place within the United States, which they consciously set up in the Constitution, that there could be no tariffs on trade between the states, proved remarkably important for the history of the economy in the U.S. And then coming into the 20th century, massive investments, partly prodded by the government and partly prodded by individuals themselves, of infrastructure, technology, science, and vastly rapid and vast improvement in educational attainment of just the everyday workforce in the United States. Those are the things that kind of put us on the path on the economy. Within economics, we've kind of been up, down, turned around, sideways, and crises always lead to academic crises of the what are we doing, and are we all on the wrong page? So I'd say, we could talk about the economics profession some if you want, but we kind of went from a historical early to mid 20th century heavily laissez-faire doctrine kind of being really the only viable economic philosophy coming out of the profession, to macro going into very different directions, and then coming into the 21st century, heavy emphasis on behavioral economics and incorporating some of the insights of psychology into economics, and massive increase in the use of data and the prominence of microeconomics kind of as paramount in the field rather than macro. So they've diverged a little, but I do think how the economy's gone has gone hand in hand with how the economics profession has.
Yeah, so I mean that's an interesting way to begin, maybe to bridge to the present day, because we're obviously in the midst of a very intense and lively debate between different groups in the U.S., sophisticated economists, well-trained Nobel Prize winners on either side, with different points of view about what the right way forward is. So I guess maybe the question I would ask is, as you examine this as an economist from an academic perspective, do you feel like the problems ahead of us are tractable problems? Are they analyzable problems? Or are we in new territory here? And then maybe to also add on your policymaker hat, how do you adjust for that? How do you deal with a world in which, there are some things that are a little bit outside the bars of what any model has predicted?
Yeah, right. Some of both. And the more out of before there ever was COVID, my contention was that one of the biggest problems that we were facing in the United States was a mindset that viewed we just need to wait for everything to get back to normal. And they were defining normal as what it was like in 2005. And 2005 was the thing that was not normal. There's a raging housing bubble. There's all these strange things going on. And so I just kept saying, if you're waiting for the 2005 bus to come back and pick you up and return you to Normalville, you're actually hitchhiking. And you don't know that yet because there is no bus. That bus is done. Now, the COVID experience, I think, has made that even more true, because this is a business cycle, a recession and a recovery, unlike anything we've seen before. It's caused by something that has nothing to do with the economy. What sectors are hit are a bunch of sectors that we always thought were recession proof. So in the big rich economies, the advanced Western economies, they're dominated by service sectors, the healthcare economy, personal services, leisure and entertainment, travel and tourism. All of this stuff is 75, 80% of the US economy. And it usually doesn't go down in a recession. And then COVID strikes and everybody says, well, I don't want to go to the Bears game. And they didn't want to go to the Bears game before, so I'll pick a different one. I'm not going to go to the gym. I'm not going to go out to a restaurant. I'm not going to go to the office until COVID passes. So you've seen the tension, which is the kind of behind the premise of your question, of leading economists and leading policymakers trying to jam the current experience into the model that was fitted to data from business cycles that have nothing to do with this. And so they're making predictions like, how fast will we come back? Will there be inflation from this comeback? All of which are based on what did the numbers show in 1975 or 1995. And I think we got to do some soul searching, because it's clear that those models don't work.
Yeah, I mean, it strikes me as that's what's interesting about this discussion about the economics and the economists, which is that
yes,
the cognitive model you show up with matters when it is time to make policy. And as you pointed, I think all of us, you'd hope people understand we're living in an age where we're well outside the bands on so many things. Things are moving faster. There's a degree of interconnection. And it's from a policy perspective, obviously a fascinating challenge. Both East and West, I guess, in that sense, are confronting things that haven't been seen before. And Dolly, maybe that's a good place to turn to in China. I mean, China has achieved something that's never been achieved in human history, which is the elevation of hundreds of millions of people out of poverty, rapid industrialization, incredibly rapid shift, to an information-based economy. I mean, I can tell you, somebody who's lived and worked in China since 2002. I was there in November and December just this past year. It's a different country than it was a year ago. COVID, if the logic you hear is that COVID was fundamentally an accelerator for things that were already underway, it accelerated people watching movies at home and video conferencing and online shopping, and maybe accelerated U.S.-China tensions. It accelerated Chinese domestic demand. It certainly accelerated the emergence of a new consciousness, but now they are about to continue to attempt something that's never been done before in history. What Xi Jinping has called moving into the deep waters of reform. Where does the economic model fit there? What can we learn from the kind of political ecology of the kinds of people who are thinking about the economy? One of the striking statistics I always have in mind is that in 1981, the average education of a provincial party secretary in China was a fifth grade education. When I was there in December, I saw provincial party secretary, which is what most of them have, and so there obviously was a tremendous kind of intellectual surplus that could be caught. But it still doesn't help you when you're dealing with something that's never been seen before in human history. So, Dolly, what's your analysis of how that's?
Well, first of all, in many ways, China, on the one hand, of course, had fumbled with the initial outbreak in Wuhan. But at the same time, as we can see, in fact, the Chinese leadership responded when it finally was convinced this was a new novel disease that was highly contagious. They took a very decisive decision to lock down 11 million people. But part of the reason is that, in fact, many of those people, and I have been studying it quite a bit actually in recent months, was that they dealt with SARS, including President Xi Jinping himself. So in many ways, it's the same people, in fact, who handled SARS in 2003, who had the memories of it, who actually in 2003 were quarantining thousands of people, deciding to do the same, but on a much larger scale this time. But at the same time, as you rightfully pointed out, in many ways, actually, China's economy in 2003, China had only recently joined the WTO at that time. The Chinese economy was on a much smaller scale. But at the same time, however, now it's a $14-15 trillion economy in a way that, of course, is significance is being felt. But my sense is in this context, in many ways, the Chinese leadership gradually, very quickly studied, and the way it handled the economy and also the pandemic actually speak volumes about how China differs from China in 2003, let alone going further back, is that at that point, in 2003, China was on the receiving end of WHO travel advisories, and in fact, basically felt deeply troubled by what was going on, really apologized to the neighboring countries and so on for what had happened. And this time, in fact, the Chinese leadership really took a very different tune. They decisively intervened by January 20th, but at the same time, they also took an extraordinarily strong stand in terms of analyzing, dealing with the virus, and also taking a global stand as well. And I think in many ways, actually, they intertwined the public health aspect with the economic management and with their sense of how to manage the economy. And of course, as we all know, and going back to the issue of economics profession, and also governance, is that the Chinese leadership actually, on the one hand, they listened to Milton Friedman, who visited Beijing in 1988, but at the same time, they kept a respectful distance, also trying to build keeping the state sector strong, investing in key sectors, and so on. I think actually they are even more convinced that that's what they need to do. But at the same time, however, the rest of the world is changing. Its reactions to China is changing as well. And that means actually in certain sectors, for example, especially in innovation, semiconductors, and so on, we are going to see much intense interactions in many ways going forward. And I think that's a lot to say about how the Chinese leadership sees it. And as part of it is in terms of bringing China into a fully modernized economy, and that's globally strong. And of course, presumably on their account, it's going to be larger than the US economy.
So an element of that, Dolly, obviously is trying to get as large a middle class as possible. That, one of the things we know from history is that having a middle class is an incredibly stabilizing thing. I mean, that was a great lesson of the 19th century that, Bismarck and Disraeli and others understood, is that once people got in the middle class, they don't want a revolution. They don't want to burn down the house that they've just bought. You almost define it not simply in economic terms or income terms, but say, you're sort of in the middle class if you think your kid's life is going to be better than your life, and you have that kind of optimism about the future. And certainly that's something we see expanding a lot in China. How do you feel about that progression? I think it's maybe also a way to link a question that is probably interesting, which is, what's the right balance between economics as a source of legitimacy for political system and other issues?
Well, I think the key is to keep in mind that this remains a Communist Party in power, and in fact, the leadership, is launching a new campaign to really guide members of the Communist Party to learn about party history, and in this case, actually, always keeping in mind issues not just actually of economic growth, but also issues of distribution and of justice. And in many ways, actually, if you look back, and as you know very well, part of it is really enabling Chinese families to own properties. For example, 90% of Chinese families own some property, much higher percentage now than in the US. Of course, the land is a separate issue. But at the same time, over the last, in 2015, President Xi launched this major campaign to eradicate dire poverty by 2020, and he's just celebrated and actually is transforming the Anti-Poverty Commission into the new Rural Revitalization Administration. So in that sense, actually, the balance between growth and equity has been on the agenda for the current leadership, and they see that as crucial to maintaining the growth momentum and, of course, also stability. But they also see it as helping to undergird the continuing drive for innovation, but also for in fact demand, because a country, only a small proportion of the population are rich, are not going to provide the same kind of demand as a country where wealth is more broadly felt and shared. So in that sense, I think actually the Chinese leadership do have a guiding set of principles regarding distribution and so on. And in fact, they have been very steadfast and also very hard charging in pushing it. And to the extent that Xi, in many ways, is really one of the leaders who are most aware of risk, of all kinds of risk, of his strategy is really to eliminate major risks. So he sees poverty as a risk. Redistribution is a risk, and all of those issues, in fact, are on his agenda in terms of balancing the economy, but also finding that balance between the state and society and the economy.
I think that's a good point. Austin, maybe that's a good place to turn to you. Is the decline of the American middle class reversible? And can you imagine where there is a thriving American middle class, or are these larger forces, these engines of inequality, just so powerfully rooted that there's no amount of regulation that can turn them off?
I don't know if regulation is how you fix it. The forces contributing to the inequality are pretty deep seated, you have to think, because it's been a 30, 40, 50 year trend. That said, I do think that this is every year gets to be a bigger and bigger issue, and these events of COVID, kind of like you had noted previously, have just accentuated and put right in people's face these issues. That basically, if you work in the knowledge economy, so you could do some or all of your job from home, you didn't really have a recession. They have, if you look at their stock market wealth, it's way up. Their incomes didn't go down. The unemployment rate remains very modest for them, and they didn't experience a recession. Where if you look at lower income occupations of people who have to go to physical locations to do their job, whether it's waiters or custodians or all sorts of job occupations, there it's Great Depression like. The real unemployment rates are in the high double digits and maybe pushing 20%. the thing is, making the comparison to China, I guess, in a way, I'm sort of a contrarian, but I start from the premise if China's basically 4 times as big as the US in population, but the economy is not as large as the US economy, which tells you the per capita income in China is way lower than in the United States, a quarter of the US income level or less. So it's not the right way to think about the economic relationship of the US and China is absolutely not that these are the two great competitive powers competing directly against each other. The vast majority of the US economy, has nothing to do with the rest of the world. We're predominantly a big domestic economy. And for the part that does overlap, China is much more directly overlapping with, say, Mexico. Mexico is about 15-20% richer per capita than China, but it's that kind of middle income, high to middle income countries where most of the Chinese economy overlaps in the international sphere. So I'm actually, over the longer term, somewhat optimistic. I know we're just coming out of this horrible period of conflict and just pit in your stomach kind of nature of like, oh God, what's going to happen next with the trade war? But I actually think if we have this panel in 10 years, a lot of the tensions in the US and Chinese economic relationship, I think are going to sort of drift away, because as China gets richer, its economy is going to naturally look more like the rich countries now, which is to say, dominated by services that healthcare, financial services, education, travel, tourism, leisure and entertainment, all that stuff's going to get bigger and bigger in China. And that is a natural source of domestic demand. And I think the leadership in China knows that, and they're kind of wanting to move in that direction. And as that happens, I kind of think this feeling of tension might be a little less. And the challenge to the leadership in China is that the next step is back to what you described, let's move into the deep water of reform. It looks different than the going from very poor to middle to high income faster and bigger than has ever been done before. That is impressive of itself, but now you got to make some choices, which it seems like they're of two minds on it, that the share of the economy that's state-owned enterprises, once you get to that middle income section of countries' income distribution, the state-owned enterprise share usually falls quite a lot, that they're kind of replaced with private sector. In China, you haven't really seen the state-owned enterprise share go down. So they've got the highest state-owned enterprise share you've ever had for a country as rich as they are. And certainly what happened with Ant Financial, I don't know if people watched it, the financial wing of Alibaba was going to have an IPO, and it was very likely to be the biggest IPO in the history of the planet. And the Chinese government, for reasons part of which we understand and part of which we're still gathering, they kind of cracked down on the company and pulled the IPO. And the reports are that the government decided that some of the leadership's rival families or enemies or something was stood to gain from the IPO, so they didn't want it to take place. I don't know how that maintain the control of the central party is going to mesh with we want to be rich and innovative. They might be able to pull it off, but I think that's going to be a source of tension for them.
Let me just quickly before we pivot over to Dolly on that, I'm just back on this question of the U.S. system. I mean, are you confident that there are these deeply seated engines of inequality, and they run faster and faster, frankly. And they seem to, in many cases, be beyond the scope of regulation may not be the right answer. I don't know if is the right answer, reform is the right answer. I'm not sure what the right answer is. But I mean, if we are sitting here in 10 years from now, do you imagine a more equal distribution of wealth in the United States, and how will that be achieved?
Of wealth or of income? I mean, wealth and income are very different.
Yeah, I'm interested in wealth.
I hope we do, but I'm not sure. In a weird way, the wealth distribution is more amenable to policy than the income distribution, because a lot of what's happening with the income distribution, I think of it as the wealth distribution is basically what's saved up, and the bank accounts and the stock market wealth and the land holdings and the whatever of wealthy people. It's far more distributed to the top than is income of how much do you make each year. How much you make each year, a big driver of inequality on that side has been the rise of knowledge work and of technology. And basically any person, city, state, or country that has higher skill and higher education has done well. They not only have higher income and lower unemployment, they survive the recessions better, they've survived COVID better. That part, I don't know how, as I say, I think there's strong forces, and that's probably going to continue to grow. It doesn't have to grow at the rates it's grown in the US in the last however many years. And I certainly don't think, I don't want to get political, but I certainly don't think that in an environment where the forces are pushing you toward inequality, to me, it doesn't make sense that you would massively cut taxes for exactly the people who have been benefiting and set up tougher and tougher and smaller safety net for the people who've been suffering. I do think on the margin, stuff like that, like what will be in the safety net, how does healthcare fit in the safety net, how does more education fit into the safety net, that stuff in 10 years I think is addressable. But the underlying force that knowledge work has a higher rate of return lately than physical work, I don't see that one changing.
Okay, that's an interesting point. And I think it highlights maybe a good place to just kind of this moment where questions around economic legitimacy and prosperity begin to turn into political questions, which is presumably what will happen if we are sitting here in 10 years and these problems in the US have not been addressed. How do you think about that kind of looking forward in China? Now that you're with high expectations, younger people kind of finding an economic middle class identity for themselves. How do you think about that looking forward?
Well, that's truly one of the most challenging issues facing not only Chinese society, but American societies, because of the way platforms and information have been used. And in the Chinese case, also because of the government censorship and the ability of the government, the ruling authorities, how they can actually manipulate the information in a way to guide the population. And in that sense, actually, China is operating on a scale that's very different from other societies. And in fact, we look at the young people. I have done quite a bit of work, for example, on the network called Bilibili and so on. You have two generations of young people now who have only seen growing prosperity. They are incredibly optimistic, but at the same time, they are also very patriotic, and they have very little toleration for people who question the system, and also, but partly that's also engineered. But at the same time, that's actually the kind of way that the leadership and the system have been able to garner the kind of nationalistic support and use and harness it to enhance China's competitive position. But of course, the challenge, as Austin has rightfully emphasized, is this process may also undermine growth in certain respects, especially, for example, in certain cases, making it harder for private businesses to thrive. But overall, though, China actually remarkably has been incredibly successful in generating, for example, a lot of the gigantic new businesses in, for example, in the internet economy and so on. So I think the challenge for the leadership in China has been to balance it. But at the same time, to sustain the growth while the Chinese population continues to expand and is still not aging, the aging factor has not actually kicked in so dramatically. But in 10 years' time, however, the situation would be very different because the population in China is aging rapidly. And of course, with fertility rates declining dramatically in China. So a lot of the burdens of aging will begin to would have kicked in by around 2030 or so, which makes it much harder for China to sustain this kind of growth. But of course, there are a variety of ways that the Chinese leadership can alleviate some of those tensions and challenges. And that also means that not only it can reinforce the legitimacy of the system in the meantime, but also, in fact, has found a variety of other countries that are like-minded, generally speaking. And that's actually where I see the confrontation, the challenge, the tensions between the Chinese model and especially in the Western liberal democracies will continue and will perhaps be felt more keenly than what Austin has tended to emphasize lately.
Yeah, I think it's a good point. I mean, to be frank, when I wrote in 2004 this paper, The Beijing Consensus, arguing for an alternative model of the Washington Consensus that was emerging, and part of that I said in that, there's elements of to other countries, but I didn't really at that point think that you would see the degree of interest, particularly in the COVID environment, of people saying, "Hey, this is an interesting alternative governance model." When you watch the United States and the Chinese response, I think it's only natural, and certainly I find in conversations with people,
the
there's
only
a lot
thing
of curiosity about that. No, go ahead.
The only thing I would add to that is the China can, like the U.S., China can get away with things that nobody else can get away with because of the sheer size of its economy.
That's right.
Okay, so and the U.S. has had that benefit for a long time too, because we had such a huge domestic market. We could engage it. We could do things that were dumb, and we have done them many times that were detrimental to our own interests. But you kind of didn't see the damage because we're big enough. I wonder if you take some other country, even a big country like Indonesia, or take something smaller, Malaysia. If they say, I'm going to follow the Chinese model and I'm going to impose control, and we're going to have state-owned enterprises drive this, and we're going to require multinationals that come here to share their intellectual property with us and give us joint venture ownership. It will not work. My prediction is it will not work, and they can try that, but China has a element of market power because it's done so well that maybe make its model harder for other countries to follow.
No, not only that. I mean, this raises another interesting question I want to get to, which is in terms of culture. I mean, I remember, talking to somebody who was, working on this Saudi Arabian project to build, a Saudi Arabian version of Shenzhen. And I said, they've got everything they need, except they're missing one key ingredient, which is a lot of Chinese people. Right. So there's also a cultural element that allows these things to function. By the way, it's a very interesting, not the place for this discussion, but what are these cultural differences, right? I mean, the U.S. is kind of a system that runs on rules. China's a system that runs on relationships. How do those things reconcile themselves? But one of the questions, I'm starting to take some of these questions we've been getting from the audience, and somebody asked a question about kind of what is the role of underlying values versus kind of universal values. The person who writes the question asks, how do you think about claims of Confucian ethics versus Protestant ethics? Dolly, why don't I maybe start with you? I mean, do you have a point of view on that?
Oh, absolutely. Well, it's something that I teach and I think about all the time in many ways. Part of the issue is it's interesting that how when we think of East and West is China, the ruling system, in fact, has imported a lot of things from the West and also from Japan. The Communist Party itself, actually, as an organization, is not exactly Chinese. Marxism isn't exactly Chinese. But at the same time, especially in the last 4 decades, it has been quite willing to both borrow from the past or inherit from the past and also borrow from the rest of the world. So as a result, in fact, this amalgam is really a combination of different values in many ways. And also, I do want to emphasize, within China, there's a huge debate about the regional differences between especially the South and the North and so on. And we can see also significant differences in regional values and cultures as well. So all of those come into play. And the virtue of China is, like the US, is so large, so people can move around to some extent. And Shenzhen rose because the rest of the country found out their best and the brightest, and including capital, to Shenzhen, but at the same time, it borrowed from Hong Kong. It connected with the rest of the world as well. And of course, there are a variety of other cities that have been willing to do the same. Even though they are not going to become Shenzhen, they have become more competitive. And that competition among the cities in China make it very significant. But at the same time, they have also built connections with countries and economies in the rest of the world, including through the Belt and Road Initiative and so on.
Let me broaden that question a little bit in the following sense, which is one of the things that's necessary for any society to function properly is trust, right? I mean, you can almost, if you basically think of societies or nations or cultures as machines for solving complicated problems of organization, what makes those function is trust. And you have different methods of constructing trust in these two societies that are very deeply seated, that actually, go back to points where the societies were not really in deep contact with each other. Both the societies, the whole world today is facing a crisis in legitimacy of institutions and a crisis of trust. And I wonder, maybe Austin, to start with you, you look around the US, there's almost no institution in the US that is more trusted today than it was 10 years ago or 20 years ago. I mean, I guess it depends on how you slice it. There are probably some people who trust Fox News more than they trusted them 20 years ago. But generally speaking, things like the central bank, like the media, like scientists are less trusted today. Trust, how do you think about trust in kind of the information problem of economics? And particularly, how do you think about that in the US and how important?
Yeah, look, it's sad. I think your description of the data is 100% right. From religious institutions, the military, the police, educational institutions, the government, Congress, the media, everything, big business, small business, they've all gone down. Some more than others, but everybody's gone down. There are a few economists at University of Chicago at the Booth School who have they have a whole vein of research about the importance of trust in financial markets and in the making of contracts, and looking at communities where people sour on trust, then they're less willing to do transactions. You have less of the, if you think of it as, I started with my historical, it was to great advantage of the United States that we had the biggest open market in the world, and still do. And as our trust sours on one another, it's like it's shrinking our world. It's like it's making our markets smaller, because you don't want to engage in transactions with people on the other side of the world, on the other side of the country, on the other side of the political aisle. So I do think that hurts us. As an economist, I guess, to the question that came in, I'm more skeptical of cultural explanations of who is rich and who is poor than economic forces. And I would it's a lot of times it's overdetermined. There's a famous old economist, was my teacher at MIT, Bob Solow, who won the Nobel Prize. And he's the creator of growth theory, the study of growth. And they pressed him at one point in the media, what are the true sources of growth? And he said, at the end of the day, every economist that contemplates where growth comes from ends up going down in a blaze of amateur sociology. And let's avoid a blaze of amateur sociology, and let's remember that there was a time when Japan was doing well, and we were inclined to say it's because of Japanese philosophy, it's because of Japanese society. That's why. Then they had 2 lost decades. And then people were willing to say, oh, it's because of Japanese philosophy and Japanese society that they've had 2 lost decades. So I think some economic factors, like in China, they have a very high savings rate. They have a very high commitment to education, put a high value on education. There is a large open market internal to China, and they've had an export orientation to expand to the world. Those things together, they do pretty well to explain who has succeeded, what countries have succeeded in the last 40, 50 years. As they do as well as any cultural explanation, I would say. And to the extent that states and cities in the U.S. follow that same model, they've also done well. So I think the trust is an angle of culture that I do understand as an economist to have an impact. I also worry that we can be a little overdetermined and see the outcome and then try to back out an explanation.
Yeah, I mean, I think the right way to think about all these things probably is kind of complex adaptive systems, right? And things like trust or like institutions, they're emergent properties of complex adaptive systems that have many different inputs. Dolly, let me turn to this trust question for you. China, in a way, is trying to navigate a shift in the basis of trust, right? It's a society, certainly when I moved there, that really, I mean, even today, but to be honest, was very pronounced, 20 years ago, that it ran on relationships. It was, that because there was no rule of law, right? There were no rules to follow. In fact, the people who did the best were the people who didn't follow the rules to some degree. The problem is that doesn't scale. If you can only do business with people that you went to junior high school with, there's a limit to how much business you can actually do. And so the problem is, how do you actually build a sophisticated trust mechanism, both through rule of law or other sorts of things? How do you see that evolving? I mean, how do you feel about, trust in China today, trust creation? How does it compare to other places, and how important is that?
Well, that's actually truly a great question. I want to build on what Austin has just mentioned, namely this Chinese emphasis today on education, because it's not an accident that it exists in China, and it's also not an accident that exists in various other East Asian societies as well. So in that sense, there is a historical dimension, although at some points, of course, this emphasis on education was not allowed, for example, during the Mao era, but that turned out to have been more of an aberration now, rather than the historical pattern that we tend to see. So in that sense, actually, that emphasis on education and so on is a bundle of institutions and certain attitudes that the society has been able to draw on. And in fact, surveys of social trust in China tends to discount the level of trust in China, partly because it comes out so high relative to, it's not like a developing society. It's more on the level of Nordic European countries, actually. So as a result, sociologists and others have tried to say, well, maybe the Chinese level of high trust has to be discounted. I think there is a lot of argument about, in fact, respecting some of those raw numbers. Part of the reason is because of the size of the country. So some of the usual way that we tend to measure trust in Europe, for example, in much smaller societies, may not be exactly applicable in China. So when people rely on their regional and other networks, for example, from Shandong or Hunan and so on, they're not exactly relying on family. They are relying on a shared culture in a way that may be more regional, but that regional culture may be based on 100 million people. So in that sense, actually, we have to rethink about how to think about those kind of issues in a way. But at the same time, I do think the other side of the coin is there have been a lot of fraudulent activities in finance and other areas as well. So the Chinese people sometimes, especially the elderly, have been too prone to trust others in a way, and that can be also harmful. So I think actually, in a way, trust can be good generally in forging deals, but sometimes actually they can also become a liability when you're dealing with crooks and so on. So it's a much more complicated situation. But one, however, that China has been able to make use of in a way in recent decades, while building on the asceticism in a way, because in the Mao era, so much was deprived. Once that era ended, and the leadership decided to allow new initiatives, people really jumped in, and they have been so eager to embrace the opportunities and so on. So there are a lot of idiosyncratic factors that really allow China to build, to accumulate. and of course to come to the current level. But at the same time, however, of course, as we have been mentioning, the per capita GDP remains relatively low. But of course, if China is even half as high as the US, it would already be the largest economy in the world, right? So sort of in that sense. But at the same time, this is compared to many other countries, this is a society that really has been investing from textiles to space that few other societies have been able to do.
Yeah, I mean, I think one way to summarize, I think the trust point on that one, which I agree with, is China is at once a very high trust society and a very low trust society in the same place. And by the way, if you're doing business there, you really better know which portion of that curve you're dealing with. But it's a fascinating dynamic. Let me end by kind of talking about asking you guys some questions about the larger context in which we're living, which is very much this kind of revolutionary age in which technology is fundamentally altering a lot of the underlying premises that we've been talking about here. That is a world, as we're discovering, that is filled with connected systems, filled with very fast connected systems, filled with fast connected systems that are populated by artificial intelligence, just runs and looks and feels differently than one that came before that. It really is, I think we would agree, probably a phenomenal shift in a lot of the underlying nature of the way that the world works. The two societies are both having to navigate this together. There's a whole set of rules and challenges and opportunities. And, there's kind of the dominant theory of the day is that the right strategy for the United States is to kind of decouple from China and have these two systems run independently. In terms of, trying to find a trajectory that allows the world to get to a point where things are stable and where you have positive engagements and have the ability to manage these existential global risks of the Anthropocene that we face today. How do you think about how each of these societies is confronting these problems of technology and what that tells us about the future? I mean, it's very interesting to me, Austin, you mentioned the Ant Financial case, which, for those of us who deal with it, is that substantially, like all these things, more complicated than you read in the papers. But it clearly marks a view in China that there's going to be a limit to how big these companies can grow in terms of their, we think in the United States of guys like, who run the big tech companies, Tim Cook, Mark Zuckerberg, they're sort of seen as kind of features of the landscape, and the politicians come and go, but these guys are kind of always there. In China, as substantial as Jack Ma is, he's not a feature of the landscape. And so maybe, Austin, I'll start with you. I mean, do you feel like, how do you feel about American regulation of these things? I know it's something you've thought about, and it's a very important question from the administration.
That raises, it's not like when I raise that example in China, it's not like the U.S. has it all figured out. I mean, we're clearly confronting these massive technological forces that have created fortunes for individuals and for companies, given them the kind of power that we really have not seen in the United States, at least since the late 1800s or something, in the robber baron era, if then. So the U.S. is going to have to come, I think, to some public decision by the body politic of how much power do we want to leave in the hands of these big tech companies, and should it be government regulation? Should it be more competition? What is it going to be? We probably could learn. We should at least be watching what the Chinese approach is with this Ant Financial. It certainly feels like they're kind of at least drawing a line in the sand and saying, we just want all of you tech people to know we're not going to put up with that. But at the same time, these electronic payment systems are a much bigger share. They're much more dominant as a share of consumer finance in China than they are than any comparable thing is in the United States. So I think there's some tensions there. On climate change, though, which was one of the others that you're thinking about, and the kind of the decline of species and the existential threat to the planet, I think that some cooperation with the U.S. and China is going to be vital, for it to work. And in a way, the greatest thing that could happen would just be if the bread and butter economics continued the way it has in the last 10 years, which is to say, it is the cost of renewable energies that has come down astronomically, so that now it used to be nobody in an advanced country would build a coal-fired power plant because it was just too expensive, partly from regulation, but partly because the price of natural gas came down so much. It was just bonkers. You would be like, what? Nobody wants to think about coal because natural gas. Well, now solar and wind and some of the renewables have gotten so cheap that natural gas is no longer on the table. And if the cost comes down that much, you will absolutely see the Chinese saying, if the most efficient, cheapest way to get more economic growth is in ways that involve less carbon pollution, they're gonna embrace that, and it's gonna look like we're cooperating. And the thing is, some years ago, I was asked to go to China and give a talk about urbanization, and China had recently passed to be majority urban, and that it was kind of a big thing. That sort of the mental image in China at that time was absolutely not that we're an urban country. And so the question was, what are the lessons for Chinese urbanization from urbanization in the US? And what I said was, China is heavily urban now and is only going to get more so if the other rich countries of the world are an indicator. Every rich country is dominated by urban areas because we're more productive when we're in urban areas with each other. And the US has been totally decentralized. And so we've done it well and badly. And we've had catastrophic failures and we've had great successes. And you will confront a series of urban issues like transportation is going to be a problem. Housing and prices are a problem. Healthcare and delivery will be a problem. And one of the problems, perennial problems, is urban pollution. And the US went through a phase where we were rapidly developing. We had massive urban pollution. And as we got richer, the body politic decided we're willing to have less economic growth because we want to be able to breathe more freely. And I do think that this environmental, China's now getting rich enough that you can already see it. They're steering down. We got to steer down. We're going to have environmental regulations. We're going to have pollution regulations. And I think as that happens, again, it's going to make our interests pretty similar on some of these climate things.
Okay, I think it's a super good point. Dolly, how do you look at that, at this same question of kind of the ability to both kind of get hands around these incredibly disruptive technologies and also face existential threats that we all share?
Yeah, I think it's remarkable going back 10 years. Well, going back 3 years, for example, most people tended to think China, copier, borrower, stealing stuff from the US. But increasingly, I think people are beginning to see China as they respond to the challenges of creating new opportunities and so on. I mean, it's remarkable how it's a lot of the sweatshops and cheap labor in China that help to drive, for example, solar panel prices down so that renewables are much more affordable today. China did not have a Robert Moses, and as a result, it was able to develop high-speed rail in particular much more easily. And of course, at the same time, China practically bypassed the Visa and MasterCards and moved to digital payments actually in one go, practically for most people, and likewise to cellular from without landlines as well. So that kind of experience has emboldened the Chinese really to think, to innovate in a way that they still borrow, they still want to actually learn from Silicon Valley and so on. But at the same time, a lot of the Chinese experiences are going to become even more important over time. And I think in that sense, that's where a lot of the confidence is beginning to come from the Chinese leadership as they map out how Chinese innovation, especially Chinese investments, are headed down the road as they pursue the goal of full modernization. Of course, barring catastrophic circumstances in a way, I think the rest of the world has to first make sense of what China is doing, but at the same time, there are going to be not only just lessons, but what China is doing also has implications because it's Chinese investors that are investing so massively in Africa and elsewhere as well. So those will have an impact. And I do think I agree in certain respects. China is thinking about carbon issues certainly on its own now, but at the same time, it's better to do it globally rather than just China or the US alone. Likewise, actually, on certain other issues, there are, of course, China will want to play a big role in setting standards, for example, on 6G, 7G. And in that sense, actually, we better get our act together.
Thank you. Thank you for a terrific conversation. I think as we would have expected, two great minds, speaking very much in the Chicago tradition based on facts and not too much abstract theorizing, which I think made it particularly fruitful. So thank you all. Thank you, both of you, for your extremely thoughtful remarks. And I wish everybody a good rest of the day, good evening.
And thank you, Josh, for your remarks.
Thank you.